I say it over and over and over again, but start small and build. It's how you earn the right to trade more size. But what does that look like? I know it's easy to say, but sometimes that's not so easy to put into action. So what does that process actually look like? What do you have to do in terms of making something like that work? Hey there, John Henry here, Slingshot Futures Trading Group, SSFTG. I hope your trading has been prosperous so far in 2022. I wanted to take a look at what it looks like to profit roll, specifically within the realm of crypto, because it's just easier to keep things separate there. Let's say, for example's sake here, we wanted to invest $1,000 into crypto. What would that look like? How would we keep the profits rolling and our stacks growing? In comes the concept of profit rolling. This could also be considered the other side of DCA, or dollar cost averaging, into positions and out of positions respectively. If DCAing is the buying in with small pieces, profit rolling or PRing is selling out of small pieces to take profit, which you can then reinvest into other markets to keep this chain of events going. Start small, add small, compound, reinvest profits, grow massive. So in the example of $1,000, again, first off, I say this a million times, I'm not a financial advisor. I can't tell you what to do with your money. You know the spiel here, but seriously, just do your own homework. This is for example's sake. Let's say we break down this $1,000 into smaller, smaller markets that give us a little bit of diversification. So let me use my mind map thing here, and we'll go in and we'll say that we're starting off with $1,000. But of this $1,000, I don't want to just put all 1,000 into one spot. That's dangerous and kind of irresponsible from an investing perspective. So let's say that we want to split this off into 5 different coins. Coin 1, and the first coin, again, this isn't investment advice. You don't have to pick these. I'm just using these as examples. Let's just say Bitcoin is one of them. We'll also have another one, which is, ooh, man, that was a fun spelling, Ethereum, there we go. Within that, we also will have, let's say, Crow, because I love me some Crypto.com Crow. We'll also throw in there some Luna, and we will also throw in some Sheeb. Let's throw some Sheeb in there, too. We'll just use the coin names, BTC and ETH. Okay, so within this branch of setups, basically that means that each one is going to get split up into $200. So each batch, $200 goes to Bitcoin, to Crow, to Sheeb, to Luna, to Ethereum. You get the idea. Now, we also have to add in an additional thing in here, and you'll see why in a second, but that's going to be a stable coin like USDC. And the USDC is effectively where we're going to be holding everything. This is what I like calling my holding tank, if you will. What we're looking to do here is keep a running total of our investments designed around DCA and PR, profit rolling. Every week, month, paycheck, property sale, NFT flip, whatever, a portion of income should always go to your long-term growth and retirement portfolio so that you've got something to land on when, you're ready to jet ski in Maui because you're 85 and you've earned it, right? That's kind of the idea here. A portion of your income should go to your long-term wealth and success. In this case, from the crypto's perspective, we're going to use USDC or USDT, some form of a stable coin in dollars is the equivalent, as a holdings, and we can distribute that from the holding tank later. Now, if the market of our specific coin, in this case, let's say Bitcoin, is down 30% or more on one of our coins, we begin the DCA process. Now, you can be as technical or non-technical as you want here, but let's just keep it easy and say that we want to take our $200 investment and we want to divide it over 20 days. That's effectively $10 per day. So as long as Bitcoin is down over 30%, right? If I wake up in the morning, whoa, not that far. If I wake up in the morning and it's down 31%, I add $10 that morning. The next morning, if I wake up and it's down 33%, I add $10 more that day. The next morning, if it's down 35%, I add $10 that day until we eventually use up all of the $200. Now, if we use up the full $200 and the market's still down 30% and we continue, we've added to it all the way up until our full investment amount, We can continue to use our USDC holdings evenly, of course. We've got 5 coins, so split it evenly, to add to it as well to continue growing our stack and keep that momentum going while it's on the cheap. The key here is that we're always keeping a running total of the investment that we actually put in ourselves, right? So this makes our math for PR much easier later. Now, on the other side of things, if our overall profit on the position is above 50% over what we invested, so let's say even through all of our DCAs, all of our additions, all of our build-ins, all of the whatever, if it's up 50% over that. Now, again, like I said, just to really clarify this, this is all based on how aggressive you want to be. I say 50%, it could be 5%, it could be 500%, could be 200%. But first, we have to figure out how much we invested into the position total and then make sure that we're up the right amount. Now, again, since we've been using $200 as an example, let's just use that to keep math easy. If our total value of the position is $300, that means that the whole thing would have increased by 50%. We put in $200 and it's at $300 of value. So we can take that difference of $100 and divide it by 2. That gives us a $50 total profit. We want to remove that $50 out of it and keep $50 in it. That way we can grow our base stack, our initial investment, to keep that ball rolling, and so we can grow our profit there even faster, assuming that, you know, it goes up and down nicely there. But along with that, we're also pulling our profit so that we can roll that into a new project or coin. So 50% of the position is in profit, and that's cashed out to the USDC in the holding tank, right? And that's to be used in new coins or projects or whatever else is currently in an active DCA. The position that we just took profit on now, and this is important, is assumed to be break even, right? So that means that it's at a $250 value now. We left 50 in there, we took 50 out, that leaves 250. Now it has to go 50% over the 250, which would be $375, before we do our next PR to repeat the cycle. Now, of course, there are going to be times where, and this is a great problem to have, none of the coins are down and nothing is in DCA territory, and you've already PR'd out of all of your positions. They're not yet in an area to PR again, and you're just kind of sitting there. We're left with this USD that's just sitting in the holding tank, and if it's not going to get invested anything, it's dead. And dead money is useless money. Now, if there is enough in the holding tank for a new base investment, and again, everybody's base investment's going to be a different number, but whatever that number is, it then gets split down, you know, around the 20 payments like we were talking about before, where you take the 200, you divide it by 20, and you go $10 a day. The same thing here. You go into your base investment amount, you split it up over how long you want to DCA in, make sure to deduct that value from your holding tank so you don't accidentally invest it somewhere else, and then you begin DCAing into the new project. This way, you can continue to diversify your investments and the stacks get bigger and bigger along the way. So I hope this helps you understand what profit rolling is and how I approach it. It's a fantastic way to invest small bits of capital spread out over a long period of time to grow a gargantuan stack to land on later when it comes time to retire. If you'd like to join me and the rest of the VIPs in the live trade room while we trade the futures during the New York Stock Exchange Open, you can check out the free 1-week trial on SSFTG. It's right there on the main page. You can click that button there, and when you click on that, you also get our 24-page guide on risk reward and the scheduled access to get on our calendar for a 30-minute call, and that way we can take care of any questions that you have along the way. We do also go live most trading days at 1300 Eastern live on YouTube for any questions and some ES scalping and trade overview and all that fun stuff, and I'd love to see you there as well, so swing on by. Have a great rest of your day. Thanks for watching, and we'll see you in the next. Thanks.